This time we challenged our concept of finances.
A blockchain enthusiast and analyst joined us to dive into the past, present, and future of Bitcoin.
He's kind of like a young crypto Einstein, I'd say.
Yeah, he definitely knows his stuff.
And he convinced me that Bitcoin is around to stay.
Yeah, and he showed us a whole bunch of different ways to protect our investments and get involved.
He's got some interesting ideas, like how money can be thought of as energy.
Absolutely. I'm stoked about this interview. Let's check it out.
The way we live, work, and consume will massively transform soon. It's time to challenge
perception,
workplace,
finance, citizenship,
lifestyle,
surrounding.
This is 2020 Theory.
So welcome to the 2020 Theory podcast with Maverick and Moose. There are no destinations, only journeys. And today's journey leads us to Will Clemente. Will is a sophomore finance major at East Carolina University. He's made waves throughout the Bitcoin community throughout the last few months with his articles, on-chain analytics, and other database insights into the market. Will, thanks so much for joining us today.
Thanks a lot for having me on, Jason. I'm excited to do this.
Cool. So, Will, I got to be honest, man. The first time I heard about you, I was driving to work and I'm listening to Pomp's podcast, and like I usually do. And he starts out and he's like, you're not like my usual guest. You're 18. And I almost got into a car accident when I heard you were 18. And I was like, what in the world is an 18-year-old doing on Pomp's podcast? And then I heard you speak, and the way that you were able to articulate ideas, your knowledge base, there's a pretty incredible humility about you. I was completely blown away, and I felt really badly when I thought about the 18-year-old version of myself. And, once I got over the shame, I thought I'd reach out to you on Twitter and see whether or not you'd be willing to join us on this podcast. And you got back to me right away and you were all in. So, man, I really appreciate you being here, and I'm so looking forward to learning from you.
Absolutely, man. I'm always love an opportunity to talk with somebody else who's really enthusiastic about this stuff. I think, the more people getting out this knowledge to other people and helping them get on the lifeboat, the Bitcoin lifeboat, the better. So,
and I think it's still early, right? So there's a lot of people who don't understand how to get into it quite yet. So I think also educating as many people as we can and to understand it better is part
absolutely
of it.
100%. So, Will, let me start with the most important question I think that's on everybody's mind. And that is, how the hell do I explain Bitcoin to my mom?
That's a great question. I think, a lot of times people in the Bitcoin community tend to really make things super technical. And when they're trying to explain things to people, they like to flex the fact that, they have this deep understanding of this thing. But we have to really understand the audience that we're going after. And the example you gave with your mom, we need to try to put ourselves into their minds and think, what can they understand, and like how can we word this in a way that really resonates with them, right? And so I think it depends on who you're talking to, obviously, but in terms of your mom, I think you really need to break it down into the fundamental things that make Bitcoin what it is. And I think that's the hard supply cap and the fact that it's decentralized and nobody can control it, right? I think at the end of the day, those are the two biggest factors. And obviously for older people, it's harder for them to wrap their heads around this whole idea of a digital money and digital scarcity and these kinds of things, because they didn't grow up with technology, right? Versus my generation, I got a little iPod Touch in like second grade, and I've had a little device in my hand as long as I can remember. So I think for the younger generations, it's easier for us to grasp this whole idea of a digital money. But we have to, be patient with our elders and accept that, it's not their fault that it's going to take them a little longer to understand it because they didn't grow up with the technology that we had.
Yeah.
Right.
I think we'll circle back to that too, because, I know my mom is asking, do I need to worry about this in my lifetime? Do I need to start, but anyways, we'll circle back to that. Sure. So real quick with, you mentioned hard supply cap. That's, not common terminology. So what you mean is kind of like supply and demand?
Yeah, just the concept, there's 21 million Bitcoins that will ever exist, and that's written into the code, and that can't be changed, right? And so you have that, and then in addition to that, you have the rate of new supply coming onto the market, which is also called flow, which is getting cut in half. So Bitcoin's becoming more and more scarce every 4 years. And then you also have this phenomenon and the fact that there can't be more Bitcoins created than what's written into the protocol, right? Mm-hmm. And so when you have these surges of demand, there can't be any more Bitcoins created than what are written into the code. So just as an example, everybody likes to compare Bitcoin to gold, right? When gold's price goes up, it incentivizes more people to find new ways to extract gold out of the earth, right?
Mhm.
And so there's this phenomenon with gold, and we can get into this whole other thing that it's manipulated by Wall Street and big banks, but that's another conversation. But just from a pure supply and demand standpoint, when the price of gold goes up, it incentivizes all these miners to find all these new ways and invest in new ways to extract gold from the earth, right? And so what that ends up doing is it creates more supply. And so if you just understand basic supply and demand dynamics, price goes up, supply goes up, and then price comes down because there's more units, right? It's increasing the amount of gold supply. And so you don't have that phenomenon with Bitcoin. That's why we see these giant parabolic runs, right? Because we have exponential, what it really is exponential increases in demand,
Mhm.
and that's being compared to the supply, which isn't changing. And that's where Bitcoin really is like a revolutionary financial instrument, because there can't be any more created than what is written into the protocol.
Mhm. So what would you say is the past of Bitcoin? How did it begin and how did it relate to you?
Sure. So I think this is a great question, especially when you think about like the phases of monetary adoption, in the sense that you have, a store of value, then a medium of exchange, and then unit of account. So I think when Bitcoin first started, it was really what Bitcoiners call cypherpunks, these people that were interested in cryptography, which is what basically secures Bitcoin and encrypts it, right? And so those people were really the early adopters. Like the creator of Bitcoin, Satoshi, he originally sent the Bitcoin white paper, which is essentially the blueprint for what Bitcoin was intended to be. He sent the white paper out to all these cypherpunk people, which are basically just people that were savvy with cryptography and digital money. And these people had been trying to create something like Bitcoin for years, but Satoshi figured out a way to take all these different bits and pieces of digital money and put them into a combination that actually worked for the first time. Like what many people don't realize is that there had been many attempts to create something similar to Bitcoin for years and years and years before Bitcoin was actually conceived in 2008 or 2009, excuse me. So that was kind of the early days, and then we transferred into this whole age of it was people were using it for drug money on Silk Road and these dark web websites, right? And so that's what really whether you want to say that's a good thing or a bad thing, that really brought Bitcoin to the masses, and it really kind of shined some light on it, aside from just those people that were savvy with cryptography and technology. So that brought a whole new wave of attention to it. And then in addition to that, you had the Mt. Gox exchange, which was the very first Bitcoin exchange. So if you look at the price of Bitcoin, you'll see this basically like in the early days, you'll see this huge just vertical line up in the price. And what that is that's when Mt. Gox was created. And if you want to go back and look at a Bitcoin chart from back then, you could see clearly, you're like, okay, that's where Mt. Gox was created.
Well, because before the exchange, how did people get Bitcoin?
Originally, it was valued based off of the electricity. Like like the early days, the first value that was ever attached to Bitcoin, is thousands of Bitcoins for $1. And that was just based off of this exchange called the New Liberty. I believe it's the New Liberty Exchange. I could be wrong on the exact wording, but they had basically figured out a way to value Bitcoin based off of the electricity that it took to mine the Bitcoins, which at the time was like on your laptop. You could mine, dozens of Bitcoins off your laptop, which seems insane now.
Yeah.
So that was the original way that Bitcoin was valued. And then once Mt. Gox was created, you had this phenomenon where everyday people, they didn't need to be savvy with technology and understand how to get their own wallet through their computer and just all the different hurdles that go through actually having this understanding of the actual technical aspect of it. All they have to do is just make an account, hit buy, and attach their card to it. And so, when you have on-ramps that make it easier for people to access it. And that's, increased throughout Bitcoin's history. And now we can get into this later about the on-ramps that we now have now, which are bringing on a whole new wave of people. But at the time, that was a huge step forward for Bitcoin, because it allowed all these everyday people to get access to this new asset, right? And so that was a huge step forward in adoption terms for Bitcoin, and also just in the sense that it wasn't just drug money, right? People weren't just using it to buy illegal things with this money that was untraceable, right? And so it kind of introduced this new the early stages of Bitcoin being considered an asset, I would say, as people began to trade it and take it serious. I mean, but back then the liquidity was so small. I mean, you could put in, a couple $1,000 and, you could just move around the price really. So it's come a long way since then.
Yeah. So where are we today with Bitcoin, would you say? And one thing I'll note is something I'd forgot about is the timing was perfect too. It came, it became in the public eye right around the time the what do they call it? The Great Crash, the recession. Yeah. Thank you. And so people lost their faith in banks, and they wanted an alternative. So, so that was, I think,
you make a really good point.
One of the reasons, right?
I'd say.
Yeah, that was the reason. So when you look in the white paper, I'm not in the white paper. I'm sorry. Each block has a message written into it. Like the developers can write a message into it. And originally the message in the first Bitcoin block was basically about how banks were going to have to be bailed out. And this was like towards the end of the recession. Mm-hmm. And so Bitcoiners always like to refer to that as like, the turning point, and how Bitcoin really was created to be the solution to this thing. Yeah. And so, I think you make a really good point that if it had been created even 2 or 3 years earlier, or 2 or 3 years later, it would have really had a big difference in the rate that Bitcoin was adopted as an asset, because now we're kind of in this sweet spot right about, 12 years where this thing's kind of battle hardened at this point. We've gone through 2 or 3 of these huge adoption cycles. And then we've also gone through certain things like people tried to fork the code, which we can get into that, where the developers tried to fork Bitcoin off into Bitcoin Cash, right? And this thing at this point now is so battle hardened. But if it had been created, just a few years following that, people at this point may say, okay, it's not mature enough. It hasn't gone through enough to really consider it as a real investable asset. So I think you make a great point that the timing that Bitcoin was created was really just perfect on Satoshi's part. And that might have been a little bit of a coincidence there, but everything's got to have a little luck aspect to it, I suppose. Yeah. To get back to your other point about where Bitcoin is in the present, I think we're getting into this point now where Bitcoin is becoming, for the first time, a real financial asset for institutions and bigger players. In 2017, everybody remembers that huge run up in Bitcoin, and your grandma and your Uber driver was telling you to buy some Bitcoin. But at that time, Bitcoin the price was really driven by retail. And you can see that in what I do is I analyze the blockchain, and I think that's what a lot of people know me for at this point. And you can see that on the blockchain, because throughout the whole time that the price was going up, you saw a steady increase of coins being moved onto exchanges, which basically means that retail was just keeping their coins on exchanges, flipping it for a quick buck, and they weren't actually taking custody of those coins, as Bitcoiners like to call it, and moving them to like a hardware wallet or some kind of custody solution. But after Bitcoin had that huge 80% down draw after 2017, in 2018 and 2019, there were a whole lot of new Bitcoin projects and really infrastructure that was built around the ecosystem. And so I think that really paved the way for where Bitcoin is now, because throughout the bear market, you had all these new projects, and particularly like institutional grade custody solutions. Now we have these lending and borrowing markets. As well, we have these new derivative markets that really, we had them towards the end of 2017, but they really weren't mature to the point that an institution could step in and take advantage of that. And we can get into everything going on with the derivatives later, because that's very interesting. But so yeah, in the bear market of 2018, I think we were getting ready for what we're seeing now. Like everything got put into place and was ready for when the if you think of it, just like Noah's Ark, right? Like they were building the boat, and now the water's here, and they have everything put together for the flood to come in, the flood of money to come in, and we're ready to handle that, I think, now. So in the 12 years of Bitcoin's existence, Bitcoin hasn't changed, but what has changed is the infrastructure that's been built around it. And so now we have that this time around. And for example, like Grayscale, we have, Unchained Capital, BlockFi, which are both lending solutions and lending and borrowing markets. And then we also have like institutional grade, custody solutions, so that these institutional players and funds that are stepping in, they don't have to, get a ledger or some kind of wallet and, hold the coins themselves, because they don't want to be responsible for messing up and losing, hundreds of millions of dollars. So they can say, okay, we're going to trust, we're going to spread our the counterparty risk, and you can do something like a multi-signature key for your coins and spread that across multiple platforms. So long story short, we now have all this, I don't want to use this word again, but infrastructure built around so that we can handle this new demand coming in. So that's what I really think makes this time different. And the players that we've seen step in the space now, it does change the sentiment around Bitcoin, but once again, that's only possible because all this stuff was in place. So that's where it really roots from. But now, obviously, from a public standpoint, they don't know about all that stuff. They just see Tesla's buying and all these companies. At this point now, it's people trusted, right? Like people have strong conviction that Bitcoin isn't just some magical internet money thing. And when you have these people coming and stepping forward and basically leading the way, right? It's paving the way for all these other people to come in and step in, right? Like when Tesla bought in February, it opened up a whole new wave of, CFOs around the country that were saying, hold on, maybe we need to take a serious look at this thing, right? And so I think seeing like MicroStrategy, Tesla again, you just got a report 2 days ago come out from JP Morgan about the risk-free spreads that you can get through the Bitcoin derivatives market, which that's going to have a huge impact on the fixed income market. Mm-hmm. So all these things are really coming into play, and I think we're far from seeing the end of the effects of where this is going.
I think the big question with the future is, when will it stabilize to the point of people use it like cash and not as an asset?
Yeah, that's a really good point. And like we kind of touched on earlier, money goes from, and this isn't just Bitcoin, this is any emerging form of money. We go store of value, medium of exchange, and then unit of account, right? And so we're still in that store of value stage, mm-hmm. where in Saifedean Ammous's book, The Bitcoin Standard, he says Bitcoin is the most efficient way to transfer value across space and time, right? And so that's what Bitcoiners are really using the asset for currently, is to preserve their wealth, especially against a deteriorating currency and well, actually all fiat currencies around the world, and to not only preserve that spending power over time, but also across space, right? I met this guy on Twitter last week, and I don't want to say the wrong country that I believe it was Venezuela, but I could be wrong about that. But point being, he lived in a country where his currency was collapsing, right, and he needed to get out of there. And you can't pack up a giant, all these bars of gold, throw it in a knapsack and take off, right? But with Bitcoin, you can. But with Bitcoin, you just need to have those key phrase, the keywords in your mind. You just need to, if you can memorize those 24 words, you can take the value of your life savings anywhere, and there's no physical storage cost or transportation cost to do that. Mm-hmm. And so those are two huge aspects of Bitcoin.
Mm-hmm. That's probably the best way for me to explain it to my mother as well.
Yeah, I think, here in the United States, we're really used to having, this privilege of our currency. Obviously, like the monetary supply is is growing, but we're not going to the store and milk is 20 times the price. But we don't realize, in other countries that's a real thing. Like they wake up a day and their currency is devalued by 20%, and the stuff in the supermarket is more expensive than it was yesterday. And so those are the people that have really been the early adopters of Bitcoin, because everyone always likes to talk about how volatile it is. Well, for some of these people that their currency is going down 50% over a couple weeks span, Bitcoin isn't volatile at all. And they get it, like in Argentina or Venezuela, like they get Bitcoin because they understand the problem that it's solving, and they experience it firsthand. So I think in that sense, it's a good thing, because you'll have all these people that are in places of the world that have been economically disadvantaged for so long. And when we get out on the other side of this thing, they're going to be the ones that really benefit from the laggards in the adoption curve, because they're the ones that were really facing the problem that Bitcoin is a solution to at the end of the day.
Fantastic.
Yeah, so kind of gets to the point about the differences between Canada and the U.S. and discussing mindsets and policies. Canada doesn't see Bitcoin as a legal currency, sees it as a commodity. You can use it to trade, for barter, like services and goods. Is that how it's seen in the U.S. as well?
Yeah, from my understanding, all the regulatory restrictions around it, it's basically set up, like you said, as a commodity. Which is interesting, because in my opinion, people always like to talk about how the government's going to ban Bitcoin, but that's actually somewhat of a friendly stance to it. And if you look at some of the restrictions, in the United States, we have this interesting dynamic where every state essentially is competing against each other for tax revenue. There's 300 whatever million people in the country, and from their standpoint, I mean, let's be honest, it's just a big pot of money, and they're all trying to get as much tax revenue as they can. And so they're all basically competitively trying to make their own jurisdiction more attractive to that pot of 30 or 300 whatever million people. And so when you see Bitcoin becoming more popular, you're going to see different jurisdictions take friendlier stances. And that's where I think this whole idea of the government's going to ban Bitcoin just goes out the window, because you're already seeing this. You have Miami, their mayor talking about how they want to put Bitcoin on their balance sheet. You have Wyoming basically taking like the friendliest stance to Bitcoin of anywhere in the whole country. Kentucky just came out with some laws that were friendly to mining. Like it's getting so entrenched, and we're not even talking about how many politicians probably own this thing as well, right?
True.
It's getting entrenched that way. And then also in the sense that the more corporations that take a position, they have a lot of money, and they're all going to lobby, and they're all going to do whatever they can to protect this investment that they have. So like at this point, I don't think there's any way that the government's just going to say, oh yeah, you need to give up all your Bitcoin, because these huge corporations that now have positions in this thing,
right.
Say, hold on a second.
Yeah,
that's not going to fly. These people
like
have connections.
You're right. Like that window of time to really put us to kibosh this, I feel like they've passed it now. Like you now have investment companies, insurance companies, banks, everyone's interested. Tons, obviously, retail investors. You're going to hurt a lot more people if they ban it. And so I feel like you're going to start to see ways that they can just regulate it, of course, but make adoption that much more easier and maybe a little bit more controlled.
Mm-hmm.
Yeah, absolutely. That's kind of the beauty of the game theory of this, is because we see it on a state level here in the United States, and then in my humble opinion, eventually you're going to see it across the world, right? You're going to see different countries trying to competitively have a more friendly Bitcoin stance than others, right? Because if I have all my money in Bitcoin, right? Like full disclosure, I have over 90% of my net worth in Bitcoin, right? And so if they come out and say, hey, we're gonna seize everybody's Bitcoin, or there comes some crazy thing, right, like that, I'm gonna pack my bags up and get on a plane over to wherever they say, hey, we're not taxing this thing, and we have a completely friendly stance. And I'm sure there's a lot of people out there, well, there are a lot of people out there that have a much bigger bag than I do, and I'm sure they feel the same way. So I think you'll see this thing where it's like, if we had one country across the whole world, and we just had like this singular government for the whole world, then maybe they could do something where they're gonna do some kind of huge tax or make it so it's like very, like unrealized capital gains tax on Bitcoin or something like that. But you have all these countries across the world that are all looking out for their own self-interest. So if they see this tax revenue that they could potentially draw in from people that are Bitcoin adopters, we'll say, okay, our country, we're looking to grow, and hey, we'll become the Bitcoin hub. We'll invest in this thing. We don't have much to lose. We'll take a shot on this thing, and who knows about what governments are planning on doing that. What governments possibly have a position on their federal balance sheet. I mean, we don't know, but point being is that in the future you'll probably see. This is all speculative, of course, but you'll probably see this dynamic similar to what we're starting to see on the state level here in the United States, where if one country takes a negative stance towards it, another country will take that opportunity and say, okay, well, we'll take a friendly stance to it, and we'll get you to come bring your talent and tax revenue here. So that's the way I see it, at least.
Let me throw in one more question for that.
Yeah, go ahead.
Is in the U.S., you need to put your social security number down if you're going to buy on an exchange, and you have to report it if there's any transaction. So I guess, is that the same in Canada?
100%. So it's right now it's traded like, if I sold my property, I have to pay capital gains tax. Same kind of thing with Bitcoin. If I made a profit on it, 50% you get to keep, the other 50% you pay tax on that. And depends on, what your earnings are, you'll pay a specific percentage of tax.
Yeah.
I just wanted to throw one thing in there. We're talking about this whole the concept of capital gains tax, right? And people are saying, hey, maybe they'll just ramp up the capital gains tax. And in my opinion, it kind of does the opposite of what they're intending to do, because if someone's saying, if you hold this thing for the short term, then you're going to get taxed some crazy amount on it. Well, that seems like it's just incentivizing people to hold on to it for longer, which is actually going to increase the price more. So
that's a really good point.
That's kind of counterintuitive if they implement some kind of capital gains tax or unrealized capital gains tax or something like that.
Right. I feel like, I've been paying attention to this for a very long time. I got in very similar to when you got in. I saw that in March of last year, everything tanked. And I was watching the stock market, and Bitcoin wasn't even on my radar, to be honest with you. I knew it was an investment, but I thought, I had a whole bunch of friends that got completely wrecked on it, and in 2017. And so anybody that ever asked me about it, I'd say, stay as far away from it as you could, focus on real estate or, the stock market. And then when March happened of last year, everything tanks. And I noticed that Bitcoin, tanked as well, but then it shot up relatively quickly and it caught my attention. And, as I was wondering, like, why the hell did this thing just jump back up? And then I thought to myself, okay, I'm not going to dismiss it anymore. I want to figure this out. I also thought to myself, if Bitcoin has already recovered a little bit, and I heard this halving was coming up, and then I started actually listening to some pretty smart people. And I thought, these people are a lot smarter than I am. And if they're buying into this, then I should dig a little deeper. And so that's what I started to do. And I started hearing like the FUD arguments and how they've always kind of been there. And so I've been paying attention and kind of becoming a little bit more satisfied after hearing how people respond to FUD through the year that I've been invested in Bitcoin. And then lately I've been hearing this really big one about the energy consumption. And I've heard obviously some pushback from some people in the field that are very smart, like yourself, who have said it's actually the opposite, and this is actually a good thing. But I feel like the energy consumption, you hear Janet Yellen talking about this all the time, how it's so terrible. So if you can maybe just put this to rest once and for all for everybody on the planet, Will, I'd appreciate that.
Yeah, so I think that's a huge issue. And just in the sense of the public's opinion, right? So first of all, I would say check out this guy named Nick Carter. He's one of the smartest people in the space, like super genius. He makes me look like an idiot and all of us. Like the guy's like really, really smart when it comes to Bitcoin. And he's put out a couple pieces now about this specific in the energy consumption around mining. And he's actually targeted some of these articles in like Bloomberg and The Economist, et cetera, that have tried to, make this attack on Bitcoin in terms of the energy consumption. But from from my brief understanding of it, it really comes down to this, right? You're comparing the energy consumption of Bitcoin to a zero sum energy consumption, like not zero sum, but something that has no energy consumption. Like, yes, Bitcoin consumes a lot of energy, but you're comparing it to the wrong thing. You need to be, it's a monetary network, or it is money, right? So you need to be comparing it to what is money now. And when you compare that to the US dollar system, it's a dramatic difference. Like the amount of energy that the dollar consumes, which is basically backed at the end of the day by the U.S. military. The U.S. military uses $250 million of oil a day. And when you compare that to Bitcoin, which uses clean energy, which is, I think, a big point that people miss, it's just a dramatic difference. There's a company in the United States called the Great American Mining. It's run by this guy, Marty Bent, who's like kind of a Bitcoin influencer, you could say, on Twitter. But essentially what they do is they take energy from the gas flares from energy producers, right? And so that the energy is just basically going to be burned off into the air and wasted anyway. So the energy that they're using to mine Bitcoin, it's not that they're taking it from something else that's going to be used. They're using energy that's going to be wasted and burned off into the air anyway and polluting the air. So yeah, I think there's a huge misconception in that sense. And then as well that when a lot of these articles are scaling the number of transactions that Bitcoin does and the amount of energy that takes, and then scaling that up into the amount of transactions that are going on every day in the world. And where that's a big misnomer is that the amount of transactions that are on Visa is not comparable to something which is Bitcoin is called a final settlement layer. So like here in the United States, we have what FedWire. FedWire is the current final settlement layer. And that's basically where these transactions are batched together in these payment networks. Like Visa is probably the most well-known. And so these millions of transactions are batched together, and then they're taken down to this core final settlement layer, which in the current system is FedWire. And then they're finally settled there. And so it'll be the same thing with Bitcoin. Bitcoin isn't attempting to be Visa. Bitcoin is attempting to be FedWire, this core final settlement layer. So we'll have other layer solutions. You're starting to see like Lightning and the Liquid network, which is another solution built on top of Bitcoin, right? And so that's going to be where you're buying your cup of coffee and you're buying your pizza or whatever, you're getting your gas. It's going to be on those upper level payment networks, and then those transactions will get batched together and then brought down to Bitcoin to be finally settled. So that's where there's a huge misnomer in some of these figures that these people are putting out that, oh, if Bitcoin continues its adoption, it'll consume the entire energy of X country by the year, whatever, like, because they're comparing it to in the sense that you're going to be using the Bitcoin network for every single micro transaction. That's not what Bitcoin's attempting
right.
to be. And it's basically, you could just think of it as it's attempting to be the foundation in which everything else is built on, right? Like if you don't have a solid foundation, you can't build the rest of the financial infrastructure around it. And so, yeah, I don't want to keep rambling, but that's what it really comes down to is people are comparing it to Visa and these other payment networks instead of a final settlement layer.
Right. Yeah, it makes good sense. I think everything's relative. And I feel like sometimes you'll hear, it's almost like people are looking for reasons to discredit Bitcoin sometimes. And they'll hear like, oh, it consumes a lot of energy. Oh, it consumes a lot of energy, as opposed to really thinking, well, everything consumes energy. And so let's really think about it and compare apples to apples. Yeah, it's a really good point.
Yeah, absolutely. And it's, you need to have some kind of energy output to create money, right? Like that's the whole concept of hard money. That's the thesis around gold, right? Like it's hard to pull gold
True.
out of the ground. It's hard to access. You can't just walk down the street. That's the reason we don't trade grass, because you could just walk outside and grab a piece of grass out of the ground. Like money needs to be hard to access. And so the most foundational way to value something, in my opinion, and I think in Satoshi's opinion as well, is through energy and energy output. And so at the end of the day, that's Bitcoin is traded on exchanges, but it really comes down to the energy cost that it takes to mine a Bitcoin, which of course increases over time.
There's new technologies coming out like proof of stake and things that are use less energy. Are those able to somehow be implemented with Bitcoin or and reduce its energy use, or do you think that another type of cryptocurrency that uses less energy could rise up?
Yeah, it's a good question. To be completely honest with you, once again, Nick Carter has a good piece on proof of stake versus proof of work. I'm really not fully educated on the proof of stake, but what it comes down to is the fact of what we were saying about hard money is that proof of stake, you're not you don't have to have this energy output to create a new unit, right? And so there's no production cost in creating it, so it's hard to justify the value of each increasing incremental unit, because in Bitcoin, like we were saying, like it costs more and more over time to pull one Bitcoin out of the network versus with proof of stake, there is no increasing cost. It's just based off of how many people are staking their coins. So yeah, I don't see any of those proof of stake coins or any of the altcoins in general competing with Bitcoin in that sense. And then in addition to the fact that none of them have a hard supply cap and none of them at the end of the day are decentralized. Even Ethereum, like over 90% of its network is on Amazon Web Services. So, you know, if Amazon really wanted to, they could just shut down Ethereum with the flip of a switch. You can't shut down Bitcoin because the nodes, which are validating the network, are distributed across the whole world, right? And then in addition to that, we have this thing called the difficulty adjustment, which in addition to the hard supply cap and the decentralization, that's one of the most important things about Bitcoin, because if half of the miners shut down tomorrow, right? Like let's say the Chinese government said, okay, we're going to shut down all the miners in China. It's every 2 weeks, the difficulty to mine a Bitcoin gets adjusted for miners based off of how much hash rate or how much computing output is put out to mine the Bitcoins. So it would just adjust to the amount of hash rate that was put out. So in that sense, like Bitcoin is dynamic in especially in regards to the mining, because whenever the amount of hash rate changes, the difficulty adjustment will adjust to that. So
yeah, nice. I had a whole bunch of questions off of that, and I've got them so we can circle back. But you mentioned decentralization, so let's jump into that a little bit. What does that mean, a decentralized currency or a decentralized asset?
Yeah, sure. So, first of all, I think it's important to reference like what we have now. Right now, we have a super centralized currency, which is controlled by the government completely, and we have no say at all in what they do, how much money they create, and so we have this dynamic where the government can basically do whatever they want at the end of the day. Like there's this old saying, "Who has the money? Who has the power?" If you go back to like the 1500s, like way back when gold was really the dominant form of money. If a government wanted to finance a war, for example, they couldn't just decide, oh, we're just going to print money to cover the cost. They had to go to the people who had the gold and say, hey, this is what we're trying to do. Can you lend us the gold, right? And so if they deemed it to, if we're trying to go to Iraq or something for gold, for oil, they could be like, no, that's stupid. We don't want to bother the people over there. Like that's not worth us financing. And they can just say no. But right now we have this dynamic where, they can just finance it through money printing. And so when you put the money in the hands of the people rather than the government is now at the will of the people and has to look out for the best interests of the people, versus the people leeching off of the government and needing to do whatever the government is saying so that they can continue to take part in the money that the government controls. Right. And so with that being said, Bitcoin is completely decentralized. So it is controlled by nobody. Even if I have 1 million Bitcoins and you have 0.0001, I don't have any more control of the network than you do. The amount of money the amount of Bitcoins that you have doesn't change your effect on the structure of the network itself. So that's a huge deal, because in the current system we have, it's not set up that way. And so I think that sets up a lot of different incentive changes in society. Like now the government, they're printing so much money. It's basically, at the end of the day, it's decreasing your value of your savings over time. And another way to think of that is they're like lighting a fire under your ass to spend. And so now we have this deeply ingrained incentive structure into our society of, as soon as I get money, I'm going to buy this. And as soon as I get some money, I'm going to, see the thing that I can afford with all that, and I'm going to save as minimal as possible. Granted, not all people are like that, but I think the vast majority of society is that way, and it's not necessarily their fault. It's because we've been incentivized that way over decades of inflationary monetary policy, and it's almost been like subconsciously ingrained into us. And so with Bitcoin, it's the complete opposite, right? If I know my spending power is going to go up by 10 or 15x, right? I'm not going to spend money on stupid stuff. I'm going to say, okay, I can buy this $5 cup of coffee, but if I put that into Bitcoin, then this turns into a $200 cup of coffee. And you think twice about making those decisions. And then in addition to that, you change your lifestyle choices as well. Like, I don't want to speak for other people, but at least for myself, since I got into Bitcoin, I'm saying, okay, well, my spending power is going to go up over time. So I'm going to take care of my body and my mind so that I can appreciate that and enjoy that spending power appreciation. And I'm going to plan.
Love that. Smart.
Yeah.
I read a book on that topic right there. Like new way to spending. But so I just want to dive on decentralized just a little bit more. So if the government can regulate it, and if things like Robinhood or whoever can, the Coinbase can take a piece of it when you do a transaction, does that make it not so much decentralized? Does that kind of take away the promise of Bitcoin if the government and other businesses can control your transactions?
Well, yeah, you make a good point. So in the sense of the actual network itself, like the core network itself, it doesn't have any effect at all. Like it's just the infrastructure built around it. So it doesn't change how the network is structured or how it functions at all. But it does change, and this is, I think, what you're kind of getting at, some of the incentives around adopting it, right? Because if they come out and say, if you buy Bitcoin, we're going to throw you in jail. Well, that's not changing the network itself, but it is changing the incentive of if you want to buy Bitcoin or not. And then in addition, like the exchanges, like they have almost like Coinbase almost has a monopoly. I mean, let's be honest, over the on ramps, especially for everyday people to get to Bitcoin. But I look at it this way in like a free market kind of aspect. Like if they came out and said that, they're going to have these harsh restrictions on Coinbase, or Coinbase starts, having foul play in the way that they operate, people are just going to migrate to another exchange.
Right.
And so, yeah, I'm trying to think how to word this. At the end of the day, it's not affecting the core network itself. And so I think, yeah, if something happens to Coinbase or any of these other exchanges, there'll be other on-ramps that are built for people to come along. And so in that sense, I don't think it affects the decentralization of it. It affects the ownership, obviously, because Coinbase has on their exchange, I want to say like 900,000 coins or something like that. I might be off on that figure, but right around 1 million. So they have a fair share of of the amount. So in that sense, they own a lot, and they can change the price, right? Like they could dump all the coins tomorrow and tank the price, but at the end of the day, they can't change the Bitcoin network.
Yeah, and I think everybody's. All these, I think it has to be the free market. Like all these exchanges, they can all take their cut, they can all take their piece, but no one can take too much, because then people will go elsewhere to get it. And as this thing continues to grow and evolve, the on ramps they're going to grow as well. Like I remember last year, I couldn't tell you all the exchanges to get a Bitcoin off of, and now I feel like it's doubled or triple. Here in Canada, at least, I know in the U.S. as well. So I think that everyone's always going to want their cut, governments and businesses, and there's nothing wrong with that. I think that hopefully, though, with the free market, it's only going to be to a certain level, because otherwise people will go and find, like you said, I'll pack my bags and I'll move to a different country, or I'll move to a different exchange and I'll get a better rate.
Yeah, you make a really good point. And one example of this, there's this Bitcoin service called Swan. It's very popular with like hardcore Bitcoiners. And essentially what it does, and their competitive advantage against Coinbase per se, is they can charge much less fees for buying Bitcoin, because they only are dealing with Bitcoin, versus Coinbase has all these hundreds of different coins that they're offering. So their frictional costs are much lower, and so therefore they're allowed to charge a much lower fee for Bitcoin itself. So yeah, that's incentivizing Bitcoiners to go over to Swan. And in addition, Swan has these features like I use Swan, so like it automatically stacks Bitcoin. So every time my paycheck comes in, it takes a portion of that, and I don't even need to log in.
Oh, cool.
I just have it set. Yeah. And it'll automatically put it in there. And then once it hits a certain limit on Swan, then it instantly sends it to my hardware wallet. So it's all these different things are like you were saying, if someone doesn't do it, then the next person will. And then it's forcing others to adopt what they're doing if people begin to find that attractive. And you're seeing that on an institutional scale as well. Like you have, I know you guys in Canada have the Purpose ETF, which, by the way, has yet to have a single negative day of flow, which is like unheard of.
Yeah, that's what I heard. It's the first, isn't it? The first ETF in the world, Bitcoin ETF in the world.
I believe so. I believe
right?
it's at least the first legitimate one that the players are going to invest in. I think they're above $1 billion assets under management.
That's right.
In the last week or so, I believe.
Yeah.
But yeah, you're seeing so many here in the United States trying to get past. I think we have 36 in the works.
Wow.
Yeah, it's insane.
And for us here, like a lot of times we talk about, the taxation and, capital gains and stuff, but we actually in Canada, we have a TFSA, a tax-free savings account, where Canadians can literally go and buy the BTCC, or, maybe a closed fund like QBTC, and they can put it right in their TFSA, and it grows alongside Bitcoin, and it grows tax-free.
That kind of goes back to the whole idea of, as the on-ramps become more frictionless, for lack of a better word, over time, it's going to increase the adoption, because like you said, your mom and your dad aren't going to secure their private key and do all that.
Right.
Like, they're not going to trust themselves to be able to do it, first of all, and second of all, they're probably just not savvy enough with technology to do that. They're looking for something where they can just do what they're used to, which is going through a brokerage account and just one click, boom, and they don't have to worry about it.
Set it, forget it.
Yep.
Yeah. So I wanted to ask you a couple of questions about maybe not decentralized, but you see people like Michael Saylor, who I'm a huge fan of. I bet everybody that loves Bitcoin is a huge fan of Michael Saylor. He's able to articulate himself poetically. I feel, so it appeals to everyone. But I also see, these massive companies who can acquire so much Bitcoin. So my thought, or my question was, it's a lot of power in the hands of a few. So even though there's a lot of us retail investors, if someone has 90,000 Bitcoin or 900,000 and ends up, I think one of them, even like Satoshi, they're worried how much Bitcoin he has and will he ever come back and then dump it on the market? Is there any cause for concern that with these large organizations, when they've seen 5, 6, 7, 8 times their money and they want access to it again, and can they dump it on the market? Like, because it could be like the prime mover, where it's like, Tesla. It's like, we've made enough money. I think Tesla made all of the revenue they generated last year. I think they've already done that in the appreciation of their Bitcoin, which is awesome. But if someday Elon wakes up and says, you know what, I'm good, I'm going to cash out now, can that not negatively impact the market? And so is that not another fear that these big companies would just dump it on the market?
Yeah, you make a really good point. I would say, first of all, the presumption of underlying that statement is that people are going to want to go back to fiat over Bitcoin. And if you have this shift of trust from fiat currency to Bitcoin, and people begin to, which I think a lot of us already feel this way, but the majority of the world hasn't come across this realization yet, that Bitcoin is superior money to fiat currency. If trust is lost in fiat, and we see over history, like the loss of trust in money can happen very fast, like in a matter of months.
Sure.
So if that were to occur, then I think you'd see this huge flock to Bitcoin in addition to people not selling. But in the short term, I think you're right that it does pay. It is a risk to the price, right? Because like you said, Tesla or MicroStrategy could dump half their holdings and probably drop the market 40-50% in a day.
Yeah.
So, but what I would say is that eventually those Bitcoins will get bought back up.
Right.
I think it could have a short-term effect on the price for sure. But those hardcore Bitcoiners will step in and buy the coins at the end of the
Scooping
day.
it up.
Yeah.
Makes sense. Yeah.
It's kind of scary though, them having that kind of power, like imagine if a company could, just in one move, drop the price of everybody's, USD. So that
Yeah, for sure. And over time the coins will get distributed. That's another, one of the big fought arguments against Bitcoin is that it's the ownership of it is centralized, which to an extent it is true. But Bitcoin's only been around for 12 years. And then in addition, if you compare it to like, obviously we're talking about money here, but I'm just saying if you compare it to stocks, stock ownership is dramatically skewed, excuse me.
Skewed, yeah. And screwed.
Yeah, both of those.
Yeah.
But like the stock market ownership, I think like 85% of stocks are owned by like less than 3% of the like entities in the market. So yeah, I think you could make the same argument for stocks. But if we're just talking about Bitcoin, because we are talking about money here, it's going to get distributed over time. And you can see that in what I do with the data analytics. You can see that on the blockchain is that over time, the longer term holders, they do sell their bags onto the market, especially in these bull runs. When we got up to like 27 to 32K, you saw a huge increase of long-term holders selling. But obviously those coins were scooped up by the new players, which are the institutional players. And so you continue to see this dynamic throughout Bitcoin's history where older coins over time are sold into newer bag holders' hands, right? And so over time, it will get distributed, especially when Bitcoin becomes fully adopted, right? And it's not appreciating at 200% a year. Theoretically, if Bitcoin becomes the monetary supply, you're talking about something that's going to be like this super liquid, very stable thing that's very boring, and it isn't fluctuating at all. And so at that point, once Bitcoin, the returns on it and the appreciation in spending power goes down, and you start to see stocks and other things and other assets that are offering you a more attractive return, then those earlier holders will, distribute those coins throughout the population. So it absolutely will take time, and I think that is a legitimate risk in the sense of the short-term price action, but I think it's just something natural, and you do need people to have strong conviction and hold the asset for it to appreciate over time.
Right. Will, is Bitcoin infinitely divisible? I mean, there's 21 million, but obviously you can buy Satoshis. Is it infinitely divisible?
Yeah, that's something people like to throw around, the fact that it's infinitely divisible. I think I've actually said that before.
Sense?
It's not true in the sense that it's possible to divide it by any decimal, but the current code is written into you could divide it by 100 million times, and so one Satoshi is 100 is 100 million of a coin, which is actually interesting because when Bitcoin was created, the global value of fiat currency was 2.1 quadrillion, and when you do the math, that comes out to a 1-to-1 ratio of dollars to satoshis. But anyway, so it's kind of a yes and no answer in the sense that the protocol currently is only divisible. The one coin is divisible by 100 million, but you can make a change to the protocol. Like let's say years and we're talking like decades down the road, people say, okay, we need to move the decimal over 2 or 3 times. You could have the majority of node operators that are validating the network. If you had the 51% more of network participants say, hey, we want to make this change to the protocol, you could do that. And you could just move the decimal down. But if that happens and you have 51% of the node operators, then it'll be in the best interest of the majority of the network users anyway.
Let's touch on security real quick. So your wallet can be hacked pretty much. Like if somebody gets my password to Coinbase, they can hack it. But unless you take it offline, is that really the only way to secure it, or how secure is Bitcoin?
Yeah, so like you said, it really depends on the custody solution that you're using. Obviously, if you're using an exchange, it's like a huge mantra in the Bitcoin community is not your keys, not your coins. And so when you hold your Bitcoins on an exchange, you obviously have that counterparty risk of you're trusting that Coinbase isn't going to do anything malicious, or they're not going to mess up and somehow leak their private keys to all the coins that they have custody over and things like that, which I'm sure they're not messing around. They have all these super in-depth solutions to their custody, because if something like that happened, it would be detrimental to their company. But still, there's always a possibility of that at the end of the day, whether they intend it to happen or not. So what you can do is you can buy a hardware wallet. There's different levels of how advanced and how understanding of the Bitcoin blockchain you need to be to use them. Like Ledger is probably the easiest one for people to get started with, because you don't need to validate any of the transactions yourself or sign the transactions and all these technical things. You just log into this Ledger app that you have on your computer, you plug in your Ledger, and then the coins are sent onto the hardware wallet, but you still do have possession of those keys. And then you can get into something more advanced like the cold card wallet, which is what I have. And so that is completely air gapped from the computer, and the transactions that I'm making are completely encrypted and untraceable. So there's different levels to the security of which you're taking the custody. You can also do something called multi-signature, which is where you're creating 3 copies of your keys. You have one, and then the custody provider has one. Well, technically you have 2, but essentially if someone got the key from you, they don't have full access to the coins. And then if they got the keys from the custody provider, like Unchained Capital is probably the most popular one, then they don't have access to your coins. So you're distributing that ownership. It's all up to you, your understanding of the technology around it, which of course will probably increase as the value of it goes up, because you're going to want to understand more about this thing that is becoming an increasing portion of your portfolio. Yeah. But so yeah, I think it all depends on the person and how comfortable you feel with the asset. And then there's also some people, like we were saying, that are just going to buy an ETF or something like that, or they're just going to go buy Grayscale Bitcoin Trust and put it in their Roth IRA or throw it in their brokerage account, because that's the most frictionless way and an easiest way for them to get access to it. So yeah, I think it just depends on the person.
Yeah. So I think that's actionable advice. That's new to me, the cold storage idea. And so I'm going to go out and get, I know Jason uses Ledger. What's the one that you use?
It's called a cold card. And it was the guy we were talking about at the beginning, that the NVK guy I told you on Twitter from Canada. He's the founder of that cold card. And so it's interesting because it's completely open source, like the software into it. So you can, go and look for yourself. The one downside of Ledger is that the software is proprietary. So I'm sure Ledger doesn't have bad intentions, because it would be detrimental if something happened to their company. But it's like, for these people like that are super paranoid about taking self-custody, you can find comfort in the fact that the software in the wallet is completely open source. And then in addition, like I mentioned, you're not connecting it to a computer. And then there are some people that go to like an even further extent, that they won't plug it into an outlet in their wall. They only use a battery pack, which like I'm not on that level. But yeah, there's definitely levels to this stuff. And in addition, I recently got onto securing my private keys in this thing called the Billfodl, which is basically like this steel. It's just basically like
what's it called, Will? What was it called?
It's BILFODL. And so, and so what it basically is it's a piece of steel, and you slide in these steel letters to back up your private key phrase. So for people that are paranoid that their house is going to burn down, or their dog's going to chew up the piece of paper that their private keys are on, then that's another level of security. So yeah,
wow.
Yeah, there's all kinds of stuff out there for people that are all kinds of levels of paranoid about their keys.
I'm making the switch to Cold Card now, especially if it's made by a Canadian. I have no choice. That's cool. If you were to articulate an argument against yourself or against Bitcoin or cryptocurrency in general, what would be you don't have to go into all of it. What would be some of the top points that you would make to either argue against it, or to say, here is reasons to be cautious?
Yeah, sure. So I think there's two aspects of it. There's, price, and then there's the actual validity of the network itself. So when you're talking about price, there's several different ones. I think, the biggest would probably be the centralized ownership, like you had touched on, because obviously, someone could just come onto the market. Some whale could wake up in the morning and decide, I'm going to go move to Bora Bora, cash out, and have some margaritas. Let me sell all my Bitcoins, right? And so that would be pretty detrimental to the market in the short term. But in terms of the validity of the network itself, I would say the cryptography. There's this guy Preston Pish. He put out a podcast last week with this guy who was he's like specialized in quantum computers, which is like one of the big arguments against it, and how that could crack the cryptography of it. Which a lot of that conversation went right over my head, but I think the key takeaway is that the quantum computing is a lot further out from being successful than people realize, and that Bitcoin would probably be the last thing that they would go after if people have malicious intentions with the quantum computer. But I do think there is a risk in the cryptography, right? Because just from my personal perspective, because I don't understand that, right? And so I'm trusting that these other smarter people in that technical aspect than me are saying that this thing is legit, and that the technical, all that aspect of it, it's all sound. And that's not something that I have a deep understanding. So I would say maybe that's possibly a risk. Another risk would be, in relation to the cryptography, if they changed the cryptography that they used. So right now they use something, I have no idea what this means, I just know what it's called, SHA-256, which is like something about the hash rate that they use and how the cryptography is set up. But let's say they switch to like SHA, I don't know, some other number, and they change that, right? Like even if they went to SHA-257, then all the mining software or hardware that exists right now becomes completely unusable, because all the ASICs miners, which are Bitcoin specific mining machines, they're created literally specifically for SHA-256, and their only function is that. And so when you take away the SHA-256 cryptography, then all these mining machines basically become paperweights, because they can't adjust to the cryptography, because they're created literally for that. So that could have some detriment to the hash rate around the network, and absolutely the price as well. So yeah, I would say those are the biggest factors. And then in addition, this doesn't affect the network itself, but adoption. In the short term, there is a government risk, which I don't think because of like the game theory we had talked about, I don't think that it'll play out, but it's absolutely possible. You know, nothing's impossible. The government could wake up tomorrow and decide, and you know, here in the United States, that they're going to ban it, and they see it as a threat to the dollar. So there's always that chance, and
Right.
you know, as an investor in something, you just need to acknowledge all the possibilities. So yeah, I would say that does play, that does have a risk to Bitcoin, and its adoption, because if they start throwing people in jail and they start saying, hey, if you own Bitcoin, you know, we're gonna throw you in jail, then I think it's gonna freak a lot of people out, and people are gonna do what the government says. It's interesting, like
Right.
in the early 1900s, they confiscated everybody's gold, and people had to do that because, you know, it's something physical, but it's a lot harder to do that with Bitcoin. But what they could do is something like that, where they say, if you do own Bitcoin, then we'll throw you in jail. And as much as Bitcoiners like to act like people can't take their Bitcoin from them, we do. I think this was brought up earlier in the conversation. We do have these KYC, which is this term for know your customer restrictions around these exchanges. Like when you set up an account on Coinbase or whatever it may be, you have to put in your information. You put in your address, your social security number, and they
Right.
have all that information. And Coinbase is known to actually sell that to the government. So if the government,
Wow.
yeah, that's a lot of Bitcoiners don't like Coinbase for that.
So I assume you're not going to be investing in their IPO.
We can get into a whole nother conversation about that, but yeah, I wouldn't own any Bitcoin stock, because every stock is going to get repriced, based off of. Do you mind if we go down this route?
Yeah, please do.
That's more of a financial route. So when you're valuing any asset, you're using something called a discount rate, or a risk-free rate. And so right now, the risk-free rate that people use to do economic calculation is the 10-year Treasury bond, the U.S. Treasury bond, which is right around like 1.7%. And so as bonds sell off, right, they sell, the yield goes up on the bond. And so in like a free market world, it's supposed to function this way, that people sell off the bond, the yield goes up on the bond, which draws in new demand at higher yields. So people are saying, okay, I'm not going to buy that bond at 1%, but if you know, enough people sell, the free market says, okay, I'll take on that risk for 5%, and then enough buyers step in, the free market determines the price of the bond itself based off of the risk of the government or whatever it may be. And so what the government's been doing since 2008, and way longer than this, but like really heavily after 2008, is they completely manipulate that rate. So they
Right.
come in
They're buying it.
exactly, and it's this fancy term people say, throw around, called quantitative easing, and all that means is that they're stepping in and buying their own bonds. So the U.S. government's buying their own 10-year Treasury bond, and so what that effectively is doing is it's driving the yield down. And so you can think of it as asset prices are inversely correlated to the yield on the bonds. So as bonds sell off and the yield goes up, asset prices sell down. And as bonds are bought up, the yield on the bond goes down, and then asset prices go up. So the government's been able to manipulate the stock market for the last 30 years. If you just pull up a chart of the 10-year Treasury, over the last 30 years, you'll see this consistent downtrend. And all that is the government buying more and more and more over time. And so the whole stock market, the whole legacy system, which is based, everything is built around this risk-free rate. Everything is valued based around this risk-free rate. The whole thing is manipulated. And so it's interesting because in Bitcoin, you have these annualized, which means that it's not that that the yields over a certain amount of time, like call it a couple months, and it's based off of these futures contracts. So 3 or 4 month futures contracts, which I'll explain the dynamic of it in a second, but they're annualized. So like if you took that return and then you projected it over a 12-month basis. That's the annualized return of this. But so right now, the futures on Bitcoin trade at a premium to the market spot price, right? I think Bitcoin's trading at like, I would just say 60,000 for the example, right? And so the futures are probably trading, last time I checked, I think a July futures contract is trading around 65,000 for CME futures, which is like one of the most popular futures exchanges. And so what you can do is this thing called this cash and carry trade. So what you do is you buy Bitcoin, you buy at 60,000, and then you go short the future. So you go long spot, short futures. And so what you're doing is you're locking in, the futures contract is essentially the right to buy or sell something at that specific price.
Right.
And so you're locking in the right to sell Bitcoin at 65,000 for the example, right? And then you're buying it at 60,000. So that you're capturing that $5,000 spread completely risk-free, because you have the right to sell the Bitcoin at 65,000 and you bought the Bitcoin now at 60,000. So even if Bitcoin goes down 80% or whatever, let's say Bitcoin goes down to $1, it doesn't matter, because you still have the right to sell that Bitcoin at 65,000, right? And so you can see this in the data, that this isn't just some theoretical thing. Hedge funds are actually doing this. So you can see, you can see the open interest of futures, which is just the aggregated amount of pool of money that's invested into Bitcoin futures. That's gone up over 15, futures open interest in general has gone up over 12 times, but futures open interest in hedge funds exactly is up 14.96 or 15 times over the last year. And so then when you look into that, right?
Is there any risk at all?
No, except for the only risk that you could say is the platform that you're using. Which if you're using something like CME, they have a long established history of being like a legitimate exchange for futures. But, people might feel skeptical about, using like Binance, which is like a Chinese based exchange or something like that. So it depends on, and of course you can spread your position across multiple exchanges to hedge against some of that counterparty risk. But aside from the counterparty risk, there really is no risk, because because you're just buying the Bitcoin and you're just selling it whenever the futures contract expires, and you're capturing this spread. And so you can see the hedge fund interest is going up in futures. And not only that, when you look into it, they're net short, like dramatically net short futures. So this is open interest in hedge funds. So you can see in the last year, it's just gone completely parabolic, right?
Holy moly.
And then we look at, this is the other chart I was mentioning. This could give you a better visual of it. This is net positions of Bitcoin futures by different trading entities. So you can see this is hedge funds. You see hedge funds are dramatically net short futures. So that's giving validity into the fact that they are capturing that spread by going long spot Bitcoin and then shorting the futures. And where this is really interesting is if they want to do that, they have to be long spot, right? Like you have to buy the Bitcoin to do the trade. So as long as this yield and this difference between the spot Bitcoin and the futures premium is there, more Bitcoins are going to be locked up. And so that's basically like a second halving event, if you will, because it's pulling more supply out. And so this is where the derivative space that's never been around before, and except in the last year or so, it's completely changing everything about the dynamic of the cycle. And I think that plays in the part of this huge rate that you're seeing, coins being just ripped off exchanges. I'll share one more chart with you. Wasn't
there didn't contracts recently expire? Like a massive amount of futures contracts recently expire? Like at the end of March?
That was options. So it's a little different. Okay. Yeah. Because a lot of the options are just kind of hedging against downside.
Okay.
Here's the chart, the balance on exchanges. So you see this is 2017 here, and so you can see all these different colors are the different exchanges, just stacked on top of each other. The biggest one down here is Coinbase. But throughout the bull cycle, you saw a steady increase with coins on exchanges. Then here you saw this little spike right here is the March crash of last year when we had that big liquidity event. That was actually the peak of when coins were on exchanges, like in Bitcoin's history ever. And since that day, we saw a dramatic drop down, and this is continuing to go down. And we're now down like 560,000 coins year to date, which is insane. And so, so this trade is it's important in two aspects, in the sense that it's pulling more coins out of supply, which from just a basic supply demand dynamic, obviously that should lead to higher prices, especially as we probably see more institutional demand throughout the year. The other way it's affecting, it's important, is that, like we were saying earlier, everything is based around the discount rate or the risk-free rate. And so this rate is a byproduct of Bitcoin adoption. Like as Bitcoin price goes up and the volatility increases, the futures, the premium on the futures is going to continue to go up, and the spread is going to get fatter and fatter, which is going to attract more capital in. Not to mention that there's probably some funds that said, okay, we'll throw 10 million in, see how it goes, see if this trade's legit. And then, the incentive structure on it, they're gonna be like, ouch, I'm going to throw 100 million in now. That was awesome, right? Especially considering you have these fixed income investors that are basically investing in negative real yielding bonds, right? They're buying a 10-year bond that's giving them 1.7% return, but inflation's like 30-40% in the same time frame, which is insane. They're basically signing a contract to lose a third of their spending power. So I think this is kind of this is going to cause a dramatic flood of money into the space.
Like a lot of people are talking, but I feel like I haven't really heard a lot about this. Are more and more people talking about this?
Yeah, it's very interesting you say that, because yesterday, and I can send you this when we get off the call if you'd like, and so you can dig through it. But JP Morgan came out with a report specifically on this, and they're talking about how big the returns are, and they specifically cited how the yields are annualized up to 40% on some of these exchanges. And this, if JP Morgan is seeing this, then other players are seeing this as well.
So what impact is this going to have on like the stock market? Why am I buying companies?
To be honest, that's a very good point, and that's the reason why I don't own any stocks, is because even if a company owns Bitcoin on their balance sheet, their stock price is still going to tank, because everything is going to get repriced in Bitcoin. You're using this discount rate and this from this free and open market, from this emerging form of money. And obviously, a good portion of investors and fixed income investors aren't paying a whole lot of attention to this. But they're starting to wake up to this, and it'll probably, as Bitcoin's market cap and the adoption of it grows, then people will say, okay, this is more of a legitimate rate that we can use as a benchmark. And so here's a general example. So the S&P 500, the PE ratio of it, which is the price to earnings ratio, which basically measures like its valuation in comparison to its earnings, it's a little over 33. On average across the whole S&P 500, which is very high in relative terms. But when you compare it to the risk-free rate, it's not that high, because when you get your return on a company, you do 1 divided by the PE ratio. So when you do that, it's like it's right around like 3.3% or somewhere around 3.5%, which is above the 10-year, which is your discount rate. So you are getting a risk premium, which is just like a premium in return that for taking on that risk of buying a stock versus a government bond, which governments never have defaulted on a bond in the history of the United States. So it's rational in that sense, but because it's manipulated, and that's why the stock market's gone up.
Right.
But when you value it in these Bitcoin yields, you're talking about a dramatic repricing of things. And PE ratios are going to need to come down to, if you're talking to just 20%, which is you're seeing annualized yields of 40%, but just to use 20%, this is very round numbers because you're doing 1 divided by that. So you need PE ratios of 5 to
holy moly.
to match that. And not only that, but that would be matching the risk-free rate. You need a risk premium, right? I'm not going to, like we just said, I'm not going to buy a stock if it's returning the same thing as a government bond. I'm going to want, you're going to want more of a return. So if, just as a rule of thumb, if you went from 33% to 5, from 33 to 5 as an average PE ratio across the S&P, you're looking at over an 80% stock market correction.
Holy moly.
Yeah. Which obviously I'm not saying this will play out immediately.
This is like a Big
time.
Short moment. This might be Big Short part 2.
Absolutely. It's like when the guys are sitting in the room and they're like, I don't know how I know this before anybody else does.
So we don't have to spend too much time on it because we talked a little bit about it. But worst case scenario, if the USD crashes, what do you foresee happening?
Yeah, I think that would probably be one of the most bullish things that could happen for Bitcoin, because you would have people all of a sudden losing trust in this thing that is recognized as the reserve currency across the whole world. Mm-hmm. All trade is all done in the US dollar. So people would flock to and this is interesting because you have this dynamic now where every currency is competitively devaluing against each other. Like, in German hyperinflation, a lot of merchants, there's this book called When Money Dies. It's about German hyperinflation. Mm-hmm. And when they knew what was happening with the currency, a lot of these merchants just said, okay, I'm going to switch to a US dollar standard. And they were fine. And they maintained their purchasing power, actually increased it throughout that time in their country. Now we have this dynamic where every currency is interlocked, and this goes back to Bretton Woods, where everything was pegged to the U.S. dollar, and oil can only be transacted in U.S. dollars, which is backed by the U.S.'s military power. But anyway, so if you have this dynamic where everything is getting competitively devalued because countries want to make their exports more attractive, so they're going to make their currency worth less. You have no escape valve is the point that I'm trying to get to here. And that's a first, that you've never had this situation where there's never been anywhere to run to. And Bitcoin is that escape valve that we have. So I think if you saw a meltdown in fiat currency, particularly in the US dollar, then you would have this huge paradigm shift, I think, in kind of like first principles thinking of people. And that's what Bitcoiners really did is they have this first principles approach to what money is. Mm-hmm. They broke it down into saying what money is, what are the properties of money, what makes sound money, what makes money important, all these kinds of questions that are very just core basic questions about money. And all those questions lead you to Bitcoin. And none of them lead you to the US dollar, except for maybe the medium of exchange aspect of it, I guess you could say. But any kind of first principles thinking about money would lead you to Bitcoin. So I think you see that huge shift over to Bitcoin if that were to happen.
We have obviously different viewers and different listeners. What would you say is a good takeaway or actionable item for the person who just got into Bitcoin, maybe has a little bit, and wants to get more, and then the person that's, after watching this podcast specifically, realizes, wow, I got to get into Bitcoin. How do they get in, and what's the pragmatic approach?
Sure. So I would say, first of all, to dollar cost average into your position. So if you're going to put, for example, $1,000 in, I wouldn't put the full sum in today at this moment. I would put a portion of that and then buy the rest of that in increments over time. Give it, every day, every other day, once a week. But do understand that Bitcoin's price is moving fast, so you might want to make those increments a little smaller than we would if we were in like a bear market and the price was steadily going down. We're in an uptrend right now, so you're going to want to decrease those increments in what you're buying. But that's the best way to average out your average cost basis. And the second thing that I would say is just to look into cold storage. For example, I know you have the Ledger, and that's a great way to get involved with taking possession of your own keys for your Bitcoins. and the importance of that is really at the fundamental part of what Bitcoin's all about in the sense of having sovereign control over your money. So it may seem a little intimidating at first, but I'm sure you can attest to this as well, that the ledger is super easy to get set up, and it is worth that peace of mind of knowing you're not trusting someone else to hold your Bitcoins.
And the ledger is, for those who don't know, it's literally a USB that you plug into your computer, right? And you just download.
Yeah, exactly. Yep.
So it's a tangible product. All right. Cool.
So you want to just get to some fun questions, Adi?
Yeah.
Cool. All right. So, the one that I actually have seen Adi, like I'd love somebody asked me this at 18 years old. So, you started getting into Bitcoin, it's blowing up. Obviously, you said 90% of your net worth's in there. If you look at your bank account one day and you got just, you just have fuck you money, what are you spending that money on? And do you have that urge, or has Bitcoin conditioned you to realize that this is bigger picture, that you should stay humble, stay stoic, and then wait for the future? Or are you looking to buy a Lambo?
Yeah, that's a good question. I think I'll find out my real response to this when it happens. I think I might say one thing and then might have a change of heart. I might trim a little bit of it later on. But the answer I'd give you now is that at heart, I really like value investing, and that's how I got into Bitcoin. And that's basically you're investing based off of the free cash flows that a company's kicking off. Think of it like a money machine, right? You're saying, okay, I'm going to buy a money machine for $100 and it's kicking off $10 of cash flow a year. It's going to take me 10 years to get back my money, right? Like that's the kind of investing I think is the most logical, and investing in companies that have a competitive advantage. I'm not going to buy Tesla or one of these things just speculating. I really like to have some math behind what I'm buying into. And I think having sound money will bring back that free cash flow based investing, and you'll be able to make economic calculation again. The way I think about it now is you're basically trying to construct a house with a ruler that's changing all the time. It's crazy, but having sound money will introduce a consistent measurement across the financial realm, and will probably bring back that sound form of investing based off of the free cash flow. So I would say that's what my plans are as of right now, would be to have some kind of investment fund post Bitcoin takeover of the world per se.
Yeah.
And in our podcast, we finance and cryptocurrency and everything that's accelerating in the world is we like to talk about that, but we also talk about people's perspectives, lifestyles, social issues, environmental stuff, community. So if you were to go on a 3-month adventure just to learn more about the world and kind of take a break from finance, because that's kind of your world right now, what would you do for those 3 months?
That's an awesome question. Especially being stuck up in the house. I'm a college kid. I was living it up my first year, man, and now I'm stuck in the house, can't do anything. It's killing me over here. I'm ready to go back to school. But I think there's, especially now is my point, that there's a part of me that wants to go out and travel and experience the world and have different cultures and different aesthetics and especially like here in the United States, we really don't have an emphasis on culture. Like we have, to be honest, like in the minority communities, there's a huge aspect of culture, but in the broader sense of the United States, we really don't have like this core culture or importance on it. Like in France, I know you actually learn about art, and like there's this huge importance on aesthetic. And I would just love to travel and get that kind of ingrained into me, all these different cultures, and get kind of a more round approach to life. And I think, that's not something that's tangible, but just getting a different perspective and seeing different ways of life, and not only like the non-tangible like cultural aspect of it, but also seeing architecture and just the general landscape of different places around the world. I think that's all important in getting a better round understanding of the world as a whole, and perspective on other people, and being understanding of other people's backgrounds as well. So yeah, long story short, I know I went on a little bit there, but yeah, I would love to travel. It's something that I want to do when especially when I'm younger and don't have kids and all these different things. Gosh, it can't adult responsibilities, right?
Yeah, take advantage while you can, man. It's a different world. But Toronto is actually rated. I mean, maybe this was like a couple of years ago. It probably still is the most multicultural city in the world. Now I'm a contact for you, buddy. You're in my network. So anytime you want to come out to Toronto, I got you. I'll take you out, go have dinner,
Awesome.
and show you the sights.
That'd be awesome, man. I would so be down for that. I'd love to come up there for sure.
Go see the Raptors, play some games. Hopefully, we'll be back in the stands by the time you're coming out this way.
Yeah, for sure. Sounds great to me, man.
So what's next for Will? So work, projects, podcasts, talk shows, conferences. What do you got on the horizon?
Sure. So I'm doing an internship with the Bitcoin magazine. I'm doing some data analytics for them. They have a fund that they manage their Bitcoin, so I'll be getting involved with that. In addition, I'm just starting in the next week or so. I'm starting my own newsletter, which is going to be basically market updates on Bitcoin from an on-chain analytical data perspective. I just threw around some buzzwords there, but basically I'm just using the data from the blockchain and basically trying to make my own sense of what's going on in the market. So I'll be publishing that. I think biweekly is what I'm set on doing, because that kind of gives me enough time to have some substance to write about, but at the same time keep up with how fast the space is moving and evolving. So look out for that. And so yeah, I'll be doing that newsletter in addition to putting out some content for the Bitcoin magazine, probably some articles and different content based things. I just recorded my first podcast for the Bitcoin magazine podcast. We recorded with the Glassnode CTO, who's the data provider that I use. So that'll, if anybody's interested in like a more database perspective, that guy's a genius. So if you're interested in hearing about that stuff, I just recorded with him. But yeah, man, I'm just, kind of bouncing around in the space, going where my curiosity leads me. There's a lot to really digest here. So it's like, I feel like one week I'm interested in one thing and then another week I'm interested in another. But yeah, just in general, long story short, just get involved in the Bitcoin community in different ways. I just put in my 2 weeks at Target, so I'm ready to go.
Nice.
And
Congrats, buddy.
Thanks a lot. And my school will be over in a week. I have finals on the 25th. So once that's over, I'll be trying to pump out as much content as I can. And then, of course, I'm happy to come back on this podcast again. I really enjoyed our conversation. You guys asked some great questions, and I like to just talk with other people, right? Because it helps me round out my own thoughts and kind of create my own thinking through bouncing off other people. So I'll be happy to come back on again, guys.
I really appreciate it, Will. Yeah, thank you so much. And how can they get a hold of you if you want to reach out to you or just follow along in your journey? I know you're obviously connected on Twitter. Any way that our audience can reach out to you?
Yeah, sure thing. I would say the only vehicle that I'm really using is Twitter. I am on LinkedIn, but I to be honest, I don't check it that much. I would say my Twitter handle is probably the best way to reach me, which is W Clemente, which is CLEMENTE. And then 3 I's because I am the third in the family. Carry on the William Clemente name here.
Nice.
So yeah, that'd probably be the best way to reach out. I'm really active on Twitter. If you DM me, I'll respond. I don't care if you have one follower or whatever. I don't see anybody as more important than anybody else. So just feel free to reach out, any questions or whatever, and I'm happy to respond to anybody. So
nice.
Cool. Anything else, D, that you want to add before we close it up?
That's it. Yeah, appreciate it, man. You did. You articulated so well. You have such a good knowledge of it. I learned a lot, and hopefully our audience will too. So
thanks a lot. Yeah, I would just say consider. I hope this moves you along into taking an allocation towards Bitcoin. I would say if there's anything you can take away is just to get off zero, right? You don't need to be a nut job like me and put 90% of your money into there. But, get off zero, even, put $5 in a week if you can. Just think of it as a hedge against the current system we have now. And every dollar you put in is taking a little bit of power away from the central banks. So even if you're skeptical of Bitcoin, having a non-zero position is essentially at the end of the day just a hedge against its success.
Nice.
Amazing. And so at the end of every podcast, we always kind of leave with kind of like just food for thought. So the quote I wanted to leave everybody with was strong opinions loosely held. And, throughout our life, we're a little bit older than you will, but, one of the things I learned is, it's really important when new information comes along and better data comes along that you adapt to that and you allow your opinions to evolve. And everything that you said today should lead everybody to a space where they start to evolve any preconceived notions that they had about Bitcoin, cryptocurrency, and the evolution of finance. So, thank you so much, Will, for sharing your insight and your knowledge. 18 years is just a number. You've put in the work, man, and I can't tell you how much we appreciate you sharing it with us. And I think that you could do whatever you want. I wish my brain operated like yours when I was 18 years old. I can't wait to see what you do. But we'll be following along with the journey, and looking forward to staying in contact with you.
Thanks so much for those kind words, man. That really means a lot, and it makes me feel like all this time I'm locked up in the house listening to podcasts is paying off a little bit. So I really appreciate that. And like I said, I'm happy to come on again if you guys ever have anything you want to chat about, or you just want to do like an update. So obviously, the space is moving at like light speed. So I'm sure in a month or something we'll be at a completely different stage in the companies and names that we have and taking on positions here in Bitcoin. So I'm happy to come on again, and I really appreciate you guys having me on. This was a lot of fun. This is actually one of my favorite. I've done since the Pomp podcast. I've obviously had a couple of people hit me up, but this has to be at least in my top 2 or 3 that I've done, if not number one.
Oh, amazing!
Thanks, man.